Wells Fargo putting a downgrade on JCPenney, Jefferies reiterating their call on Sonus Networks, and JPMorgan reiterating their call on Cigna. Those are this morning's analyst actions. Wells Fargo making a call on JCPenney this morning, the ticker symbol there, JCP, downgrading shares to underperform. Wells Fargo saying that they see that the stock is up 12% post-earnings, and that is telling them that perhaps the market is not fully appreciating what's already been priced into the stock. Wells Fargo saying that JCP's high level of debt likely leaves very little value for equity shareholders. And they say that they believe that achieving $1.1 billion in EBITDA is nearly impossible by fiscal year 2016. They say the stock is overvalued at current levels, and they're downgrading shares of JCP to underperform from market perform and putting a valuation target from $6 to $7, moving that to $5 to $6. Jefferies making a call on Sonus Networks this morning, reiterating their rating there. Ticker there is SONS, putting a buy rating on the shares, reiterating their price target of $5. They see it as the stock with most upside potential in the group. The company obviously makes voice and video equipment for companies. They say they recently hosted meetings with senior management there. The CEO, Ray Dolan, saying that his comments were very bullish, saying that they believe that the investors are underappreciating the company's strategic value and business momentum. Jefferies says that they continue to believe that shares can double or perhaps even triple in price over the next several years as networks for real-time communications fully transition to IP and are increasingly managed for quality of service. Moving on to Cigna, JPMorgan reiterating their call on shares of Cigna, the ticker there, CI. Right now it's trading at about $88 a share. JPMorgan has a $96 price target on the stock, an overweight rating on the shares. JPMorgan saying that they hosted some meetings last week with Cigna's senior management, including the CEO, David Cordani, and some other members of the management team. The comments there focusing on the strong earnings performance that the company's generated over the last several years, saying that they continue an expectation of 10 to 13% earnings per share growth over the long term, saying that they also like the capital efficient nature of the company's business segments and that they like the solid positioning in its growth businesses. On the floor of the New York Stock Exchange for The Street, I'm Ruben Ramirez.